the crypto market in general is starting to correct back down. Short term, it broke to the downside. So that's BTC and this is Ether. The difference is Bitcoin broke below the pattern and the moving average. It closed the last day there. And right now it's below that one. Whereas Ether still has a little bit room to reach the 21-day moving average or 20-day moving average, which is somewhere close towards the 1700 mark. So you do get the previous resistance and the support close to that. Now, on the RSI side, you need Ether to maintain above 50. So that still gives you a continuation pattern. Otherwise, you're coming down. Now, one of the bad stuff for XRP is that it's breaking this level, which is previous resistance turned support right now, and this short-term trend line. Now, if the daily break this one to the downside and close, now that doesn't actually look really good. If we break that after the 20-day moving average, what you are going to look at is 50-day moving average. So that's like 0.35 because the RSI is breaking here and we were not much higher. And you will be coming back down in the new strength reduction. So right now, Bitcoin dominance is still here because you're right now observing like Bitcoin did drop a little bit, but the coins which are hard hit, it's the altcoins. You're seeing a lot of them dropping 10-11% already. And if you're looking for the last week, a lot of them are down 20%. So Bitcoin dominance going up is going to bleed altcoins. So that means the Bitcoin dominance going up is going to hurt a lot of altcoins in the short term. So right now, we are waiting for that. But in the general market, we are observing this. At the resistance, close to the resistance, but we are not getting any bearish divergence here. So that's S&P 500. Then you go to Dow Jones and you're looking at that one. Then you're looking for the dollar. And that's where you actually get a divergence. So yes, most likely you're going to go up, hit this range, and form a new divergence and continue that divergence pattern. Because when you take a step back, last time when you broke higher, yes, you reached your measured move. That's good. That's great. And right now, your measured move is somewhere close here. So it doesn't actually give you too much space there, which actually point out like, okay, dollar is going up, but we're going to slow down somewhere close to this range. Now, in a short-term duration, you are looking for this as a trend line, and still you may get a wick to the upside, which may actually reach close to 112. Now, you may consolidate first before you actually go higher because we have seen the consolidations. Here it's longer. So even if it's actually headed to 120, we may first get a consolidation here. And when dollar consolidated does that for like a long period of time, and what crypto market need is like 2 to 3 months. So we have seen that happening again and again. And if you are looking at the general side, say gold, it's slowing down, it's going down. At the same time, when you're actually going to look at all the other assets like these, which we are talking about, they are actually breaking through that and continuing. So we do see a divergence here in the dollar, but we don't actually see that here. We are breaking to the upside in stocks. Now, when you're in the market, yes, fundamentals, technicals, all of them need to be looked at. But if you take decisions based on these short-term market fluctuations, that can hurt you literally. Because, that's more like emotional decisions, not the actual real stuff which you want to take if you weigh in the complete cognitive ability taking, without any emotions. Now, on the fundamental side, this is like, okay, that's a big pot of money saying, okay, we're going to write off our investments in Celsius. And that doesn't actually look good. Because if they believe like, okay, Celsius is going to come up back to where it was, they would have actually held it. But right now, they don't think it's possible for them to actually give back whatever is theirs. So it's like a Quebec-based pension fund dropping it. So that kind of actually creates a red flag for the entire crypto investments for them in the future, for sure. right? Now, if they have other investments, that's going to be great. But this one, I really want to talk about this one here. Like, this is a guy who's really young. We can say maybe this is just an immature stuff which he's going through, but this is not the way how you react, because especially this is about XRP and he's talking about lost the right to protection. So first question is like, okay, we the XRP holders, we haven't done anything to these Ether guys. At least we can quote it like ETHgate guys. Fine. They're not actually terming it against Ripple, the company. It's being pointed towards XRP, the asset, and those who are holding it, basically. So when I'm saying here, like, the gas fees here is like, enormous. This is literally true, because if you are actually doing this to slow down other credible projects so that your bullshit project can continue, that's still bad, because this one kind of highlights what I'm talking is sensible. Imagine all this hype regarding the merge towards POS and Ether going to be more scalable, the gas fees are going to go down, all the stuff. It usually never happens. I can give you one example. See, there's like the governments. If you look back at India, they had, when the oil price was like $120, in Indian rupees, we were getting that at 60 rupees. Just consider that. And when the oil price in the international market dropped close to like 20 or below that, and it stayed there for some time, we were paying 60, 70. It was increasing. Why? Because the governments were like, okay, we can literally loot people because they were already paying this. Why should we reduce it for them? They are accustomed to this one. Same stuff. It's like, okay, if you want to use our service, you need to actually pay this much. Fine. And the difference is they may make more profit out of this. But these kind of, stuff coming out from the guys like this, I'm like, okay, that literally makes sense. But when you're looking on the other side where he's pointing towards, it's the on-demand liquidity XRP ledger. And it's actually getting more and more adoption. And it's working. Why? Because it solves real life problem. These guys can't actually see that, or at least when they tilt to that direction, they just close their eyes. They don't want to see it because their technology is ancient technology considering what Ripple is. Now imagine this came out way earlier than Ether, or Ether came after Ripple, and still it's an ancient technology. Imagine like, today you come out and you are going to build a car which is like, going to give you the lowest fuel economy and the lowest speed, the lowest efficiency in all terms. That doesn't make any sense. Who want to actually use that? But then you go on and say all the vehicles are actually not climate friendly or any other arguments and ban them somehow. Now you get an edge. That's what's happening with this one, in my opinion. Because now we are entering into this era of central bank digital currencies. Say ECB is coming out with this argument, which we all knew, like, okay, something like this is going to come out. Like, if the current economical situation has to move on to a positive direction, you need to move. And to move away, central bank digital currencies. They highlight like central bank digital currencies are the only one solution to smooth continuation for the monetary system. Now, if the entire Europe is actually going to do that, understand the trading partners of Europe, they are also going to move to that direction for sure. Because it's not just Europe, it's going to be one by one, all of these guys are going to enter, because you already know like Bahamas, Nepal, all these other countries are already on that lane. Sweden, China, all of them are going to move. So when this actually happens, you literally need to understand like how efficient the system would be. But again, they have more control on your finance. While customers tend to attribute high importance to privacy in service, they tend to give away their data for free or in exchange for very small rewards in practice. Now, I kind of agree with this. When we say like, okay, I'm so critical about that, you do have to understand, like if you have a phone with you, near you, and that's literally like, I have this experience. I'm talking about something with a friend or my family, then I'm going on to Facebook or wherever, social media site, and I'm seeing the advertisement about what we just talked. I'm like, phew. So you're literally being tracked. Your audio, your video, everything is being tracked. Now, yes, you can go into the settings, do all these steps, slow them down, or even block them. But how many of you actually does that? Now, that actually come back here. That gives the freedom. Now, one group of people is like, okay, they are completely fine with this. If the universal basic income is coming in the central bank digital currency and they are getting it, they are fine. They don't actually care. They need the government housing. They need the food, accommodation, and everything provided by the government because they feel entitled. Fine. But the other group was like, no, I'm fine. I can manage myself. I can work, produce, and sustain. I'm not saying that, okay, you need to keep me alive, right? So you are looking at like two mindsets inside this world. And when we are going on to the CBDC era, you do have the central bank digital currencies fighting with the cryptocurrency market. And that's for sure. Now you read this. The paper concludes that the introduction of CBDCs is the only solution to guarantee a smooth continuation of the current monetary system as physical money loses its economic fitness and cryptocurrencies and big tech continue to make inroads to the financial system. So they are observing that this is penetrating into the market, and these are kind of the biggest example for that. Now, what they want is that coexist Central Bank of Brazil to operate exclusively in Forex. That's not something small. If you look at this, the importance of the central banks achieving the right level of CBDC because they don't want to give up towards the cryptocurrency market and the big tech. Now, big tech meaning, you have like, Amazon Web Service, you have a lot of different big guys coming into this arena trying to put a payments network. Now, they have the information, they have the edge. So when you're looking at these, you do get the understanding like, okay, we are talking about further rate hikes. So the market is like, okay, rate hikes are going to come, but how much will it be? Can it be another 75 or 100 basis point, or will it be 50, 25 or even lower? Because right now your inflation is still higher. It came down, but it's still higher. And the target for the central banks are like 2%. So until they meet this range, if they are saying like, okay, we are going to continue rising the rate towards a range where the inflation is 2%, I think the economy on the other side would be completely dead. Now, you may have to, literally, it would be like Walking Dead because a lot of economy right now is like zombie economy. Their debt to GDP ratio is so high, it's really hard to actually keep up. So either they need to actually go on and make it as a new stuff. Say this is one of the stuff they are like, okay, we need a reset. We need to actually raise all this debt, or we need to find some way to move further. And I think this is one of the reasons why central bank digital currencies would be coming hot. It's going to take out a lot of space. I do agree on that one, but we need to understand that the market will reflect. Because right now, say you have money in your bank, it's actually moving through the bank towards the stock market. But for the cryptocurrency market, it's a little bit hard in some region, or most of the region, they're critical. But it is slowly changing. So the money movement, flow of money towards crypto is going to increase. And when you have institutions here, there is no doubt that they're going to manipulate the system in so much different ways. Right now, you're observing like, okay, all these stable coins are actually getting more and more volume right now. They are increasing slowly. And at the same time, you observe the volume in different assets. It's actually slowing down. It's reducing. Great. But if you're actually noticing about what's happening here, last couple of days, we had even higher volume. Now we don't have that much here. So I'm asking this question like, okay, where did that actually go? Did it actually go out to the bank, or did it actually come into the crypto assets when the price is moving slowly to the downside? Now on a live chart, if you're going to see like, okay, Bitcoin, it's now closing in on $23,000 and your resistance or previous resistance turn new support is going to be 22. So you have $1,000 more to drop to the downside if you're observing this correctly on a short-term pattern. Fine. Now, if you keep the same view there and try zooming out, now you would be actually looking at 2, 3 different stuffs. One is this. You broke this one higher previously. So if you are breaking through that, we literally see a lot of highlights saying, okay, we are going to go 17,000, we are going to go 10,000 and all. But what we really have to ask ourselves is that on a 3-day chart, your 20-day moving average is here, which is going to be close to 22,000. So you do have a support there, after which the next big one comes at 21,000. So this is the previous trend line, which we broke higher. We had a little bit of retest and we bounced. So next time if you're coming back down, most likely that is going to be another support. So if you take another step back, now you're like, okay, we tried to come back up, but the 20-day moving average, we didn't even reach close to that and we are getting rejected. Now you go back in history to see like, okay, when we are getting rejected, did we get rejected so early or did we get rejected close to the 20-day moving average? Both of the times we did get rejected from there in the history. So you are looking at this, you come back, you retest the moving average and then go down if you're going down. So right now we haven't actually done that, and what we are doing here is we didn't even retest this range. Fine. Now we go to the altcoin market to actually see the same stuff. Okay, you are looking at this. Now the trend is that similar. It didn't actually change much. And your support range is going to be here. So right now you're somewhere close to that support range and it extends till here. So you have a little bit more room to actually slowly correct back down. But if this is a trend change and we are to go higher, then you may still come here, retest and bounce. Putting that into percentage terms, you can drop around from the current price level, you can drop around 15% to the downside in altcoins before we actually bounce. There is a possibility for that. Now, if you are in different assets with your targets, imagine like this. This is a quote from Peter Lynch. If you're buying an asset at $15 and you think the target is like $24, that's a good ride. And if the price goes to $6, now 15 to 24 is good, but 6 to 24 is great. So this is the real thought process of an investor or trader who has been in the market for a long time and proved himself. So you can either look at the real guy who has actually done this over and over again, managing billions of dollars. Or you can just go to a random YouTuber saying, okay, we are going all the way down to $1,000. Or in Bitcoin, we are going to $10,000. Now, these are all different opinions from different individuals. You can take mine to like that. But now you go back to these guys, the legends of the market, and listen to what they are saying. And if that aligns with one of the guys, okay, that gives more credibility that he has taken his time to go through and learn. So now coming back to the market, if we are going to drop that 15%, now put that into perspective for XRP, Ether, and ask that question like, okay, what does that actually mean for some of your trades? Now, XRP at the current range towards the next possible support is like 2%. Now that's short on a daily. Fine. Now you take all of that out and try to actually go look at this. If you are to drop 10-15%, where will that take XRP? This is where we are looking at. And that's somewhere close to your previous support. So if we are reversing from there, that's a good signal of a double bottom. And that's actually a good sign. Now, for Ether, if you are taking the same idea to actually see like, okay, how low you can go. And will that actually show like a bearish trend? I don't actually think so. The 15% drop here would be coming all the way back down. So a little bit towards this retest. Now you're looking at this range like, okay, you may come back down here and bounce. That still is a great possibility. Now we talked about that yesterday. We're going to slow down. Then we are going to go through this moving average and test the next moving average. The moving average is going to come down. Because the price is low, the average is going to come down. And by that time, you would be somewhere close to like 2,500, 2,600. So we are going to bounce. That's the chance. Now, if If you are saying crypto market is going to zero, tomorrow the world is going to end, does it really make sense to be in the market or to even think about investing? No. Now, if you are thinking that the market is going to bounce, this is the technology, world is changing, all of them are adopting this technology, then it does make sense to actually try average down or sit back and look at this noise and learn from the market, right? So guys, if you are receiving value for your time, please do hit that like and subscribe button. And remember this, market is going to be volatile. It's going to play with your emotions. All of us have a hard time managing this one. But end of the day, if you are taking decisions when you are emotional, that may not be the right decision. You can do that, you can execute that, but you're going to learn from your mistake if you're going to be successful. If you're going to repeat the same issue which you are doing from day to day, year to year, month to month, again and again, then success may not actually even turn and look at you. What you need to do is look at last time something went wrong, fine. You look at that and ask, why did it go wrong? In trading, it actually gives you the benefit. Okay, last time it was at a support. I didn't buy, but I bought at a resistance. That's easy, right? Same stuff for different assets. You go look at chart and see like what went wrong. This time, don't repeat it. So you reduce your chance of being in red and increase your chance of going to green. That's it, right? So I'll meet you on the next video, guys. Bye-bye.